Golden Rule Radio is brought to you by McIlvany ICA. ICA has been helping people take delivery of precious metals and find storage options for decades. They have also helped thousands of investors with their precious metals IRAs. Call ICA today for your free portfolio review at 1-800-525-9556 or download your free report online by clicking the link in the video description to learn how you can double your gold and silver ounces even within an IRA.
Welcome back to Golden Rule Radio. We have gold pushing a little higher today, currently around 1745. Silver's pushed a little higher from last week as well, 2632. Platinum is a little higher from last week, 1216. And palladium had quite a jump the other day and is up strongly, pushing closer to 2600 from around 2300 last week, has pushed all the way to 2,500, almost 2,600. So palladium seeing a move, and all the precious metals are. We're in somewhat of a counter trend, I'd say. You know, we've been talking a lot for the last 3 months about the decline that we've seen in gold, and it hit that 1680, 1670, 1690 level and has been up since then. That was a key level that we were talking about it hitting. And so it's moving back up. I think the next little resistance that it's going to come into is probably around 1765, 1770 miles. We're seeing this little push counter trend wise. Is this 1680, 1690 level going to be the bottom that we hold? We don't know yet, but it is pushing a little bit into the mid 1700s, and we're going to be watching it closely, whether it wants to get above that 1765, 1770 level and find resistance and come back down, or what's going to happen. So let's talk a little bit about that.
Sure. Well, I mean, hindsight's always 20/20, right? So ask me again in 6 months if 1678 was the bottom. But given the action on the Fed announcement today, the continuation of current financial easing, Easy J Powell over there at the Fed.
Easy J.
Easy J. I'm going to stick with that now. Easy J with inflation rates inching up towards about 2.2%. The only thing he really said was, unless we see a prolonged period of above 2% inflation rates, they plan on keeping interest rates as close to zero as possible.
Well, the real question is it Easy J for Jerome or Easy J for Janet?
I mean, it's the same thing,
Same
right?
concept,
Yeah.
right?
So, or Easy B for
Easy
Ben.
B, Easy G.
Yeah, Easy G. It's just been Easy E over at the Federal Reserve now for a couple decades. So with that, we will look at the dollar, and the dollar taking a pretty solid decline today, following on the heels of the Fed announcement here Wednesday. But we are seeing almost every other market up. As you just mentioned, the precious metals market's up, and the Dow Jones pushing up to around 33,000, putting in yet again, all-time highs. That's kind of getting boring to say because it does a new one every day. So like you said, let's look specifically at the gold market. I do think your next interim resistance level is that 1765, which takes us back to the floor from November we've been talking about for the last couple of months. Now, your actual 382 fib is a little bit higher. That's at 1785, so I wouldn't be surprised to see us at least climb that high. We're already seeing gold put in one higher high, one higher low since we hit that bottom at 1678. So I would expect to see gold continue to climb here. But like you said, do we see gold having the big turnaround and starting the next leg of this long-term bull market trend?
Yeah, that next leg is the one you're not going to want to miss. And so whether we've already put in the bottom at 1670, 80, if it breaks below that, I think it would probably have a pretty swift move, another $100 lower to 1575 range. But again, that next leg higher, the long-term trend leg higher that we're going to see. So that next leg higher is the one you don't want to miss. So wherever the bottom is, this is the range where you'd be accumulating. If it dips more, buy more, because that next leg higher is going to be strong.
So at least in the short term, I'd definitely be looking at gold coming up a little bit higher, and I think that's seconded by the reversal back down in the dollar today. Once we hit that price, there's a couple of things you could see gold do. We could have a double bottom back down here, sub 17. As Robert just mentioned, there are some pricing levels below 1678 that still keep us in a very strong bull market, long-term trend that we could actually continue to come down to. But one thing that we consistently try to point out on Golden Rule Radio is the idea of these stair-step levels and finding the pricing levels where you can see reversals in price that allow you to dollar cost average in your purchases as we're in this long-term bull market. So 1678 was a big one, and we know a number of people, me included, took advantage of that last week. And as Robert mentioned, a little bit under 1600 in the 1570s would be the next step down, and then you could see as low as 1445. But what you could also see happen here, and this is why you take advantage of each of these stairs on the staircase, is we could get up to 1785, and then 1820, and then 1850, and then 1950. And then next thing you know, we're back at 2100, and you're already a few $100s past the bottom before you can even say we've started that next leg. And that's the thing we're always trying to avoid here is pigs get fed, hogs get slaughtered, and you don't want to be greedy in a bull market. Because as Robert was mentioning, when you start that next leg of a bull market, that's like what we just saw a year ago where gold doubles in a very, very short period of time, or very close to doubles in a very short period of time. And now you're looking at, even on pullbacks, pricing many hundreds of dollars higher than you could have gotten in previously.
That's really good, because if we have already seen the bottom and gold does just continue to inch higher here into the 18, 19, 2000 range, again, like you said, we're not going to really be able to identify, yes, we've completed a bottom until you're $300-$400 higher. So buying here, you'd be okay because we are going higher ultimately, even if we go lower in the short term.
Sure, and in the long-term trend, 1678, as we pointed out in the last couple weeks show, is actually your most shallow reversal point. So there's still far better reversal points below that we may not ever see.
Yeah, and you mentioned gold almost doubling. Silver did double, you know, and what, a year? It's been a year since the bottom. $12, maybe a little bit lower than $12 on silver. And here we are, 26.5 roughly today.
Silver putting in that long-term trend bottom a couple years after gold did. You know, gold started the charge. It took silver a while to play catch up. It's still trying to. You know, gold hitting 2100 is silver at $55-$60. You know, another 10% above the previous high from 2011. So silver still has ways to go to play catch up. Silver has also taken an incredibly shallow reversal, coming from 30 all the way down to about 25, and we're starting to stair step up now. So silver, like gold, if it continues up, we're going to need to see pricing, let's say around 27, 26.90. And then, of course, we'd want to see silver break above the highs from earlier this year at around $28.25, and then ultimately get up to the $30 mark that we've now touched twice in the last few months. And then, of course, we're in breakout territory at that point, and silver has a very long way to go just to play catch up with gold still. But as Robert mentioned, it's going to do that very quick. You know, we saw an incredibly fast-moving silver market last year. After that ratio got all the way up to about 120 to 1, we're now down at around 65 to 67 on the gold to silver ratio. So silver is making up ground very quickly against gold, but still has quite a ways to go just to catch up with what gold has done.
I want to point out something here with silver and platinum, because if you play a little game of what's not at an all-time high or what's not pushed to a recent all-time high, try to name some assets. Well, stocks, obviously, all-time highs. Bonds recently were near or at all-time highs. Not anymore with rates spiking, but gold pushed to a new all-time high. Palladium, obviously, new all-time high. Real estate in select places, higher than it's ever been. What's not at an all-time high that's worth owning? And here is silver and platinum. They're half of their all-time highs.
Right. And other industrial commodities like oil and copper.
Right. So if you're looking for value, play the little game. What's worth owning that's not at an all-time high? And in our world, silver and platinum. And I'd say that pretty soon you're going to see them at all-time highs.
Right now, just looking at that pricing based on what you're talking about, would you rather own silver and platinum, or would you rather own palladium and rhodium?
So the point's made. There you go. Obviously, palladium and rhodium are at ridiculous prices. Maybe they go higher. I don't know. But if you're looking for value, the value is silver, platinum. And if you look at gold's inflation-adjusted price, gold's a value as well. and all of them are headed higher. So be buying in these ranges where you have silver and platinum, two of the best assets on the planet, selling at half of the all-time high.
And why exactly is everything else going higher? And I think that takes us over to the U.S. dollar. So if anybody was wondering, I think they made it abundantly clear for about the 400th time today. They have every intention of pushing the dollar as low as possible compared to other commodity assets. And we've been seeing this play out for a number of years. This goes back to the discussion about the overnight lending rates back pre-COVID. Remember, there was a pre-COVID world. And in that pre-COVID world, we were facing what could have been some pretty devastating international currency markets at that time.
Facing being the key word.
Facing
full
being,
face.
Yeah, it had already happened, and looking to see how bad that would end up getting. And then everything fell into the COVID fog over the last year, and now we're starting to see some of these cracks again, as all we've done is just add more fuel to the fire with government spending, both through 2020 and now the beginning of 2021. So we talked about this pretty mediocre bounce off a very firm support level in the U.S. dollar. So we saw the U.S. dollar take a very substantial percentage decline over the last couple years. We saw the U.S. dollar come down 88, 89 into some pricing from some previous years that sets a very firm floor in the U.S. dollar with every expectation of seeing the dollar, even from a purely trading technical standpoint, having a pretty substantial bounce, at least up to 94, 95. Man, it's taking some time to get there. And it seems like the declines happen very, very rapidly. And the increases take time. From early 2021 until the beginning of February, dollar goes up 2 points. And in the course of a few weeks, it drops most of that back down. Now we're back up to around 92.5, and we've had a couple substantial declines there. Percentage-wise, not massive, 92.5 down to 91.5. But today's drop happened pretty quick. We lost half a point on the dollar index just in a single day by the Fed saying they're not going to change anything. So the expectation of nothing changing causes the U.S. dollar to take a pretty dramatic fall in a single afternoon. I think that should tell you what direction the dollar is expecting to go as a trend for the coming years. As long as the value of the U.S. dollar is kept low, they can continue to try to print their way out of problems. And this is why we brought up copper and oil a couple weeks ago, while we're seeing gold, which should be taking a much larger correction than it is, stopping and seeing some resistance at just barely below 1,700. We're starting to see a number of these commodities rise, like rhodium, like palladium. And I think, like we were just talking about, some of these adjacent commodities are going to also have their day in the sun, with oil probably pushing to new all-time highs in the near future, as well as platinum, as well as the metals that we talk about here on this show. So everything revolves back around the U.S. dollar and what's going on in the U.S. dollar and the way the Federal Reserve and the U.S. government are spending U.S. dollars in relation to other currencies. And they've made it abundantly clear it ain't getting better.
Well, that does it for Golden Roll Radio this week. Thank you for listening. If you like what you heard, you can subscribe to our channel below. Like us on Facebook at McIlvaney Financial. Follow us on Twitter at ICA Gold or our website, McIlvaney.com. You can give us a call at 800-525-9556. Thanks for listening. Have a great week.